Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TradingView. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now, without wasting any more time, let's get straight in the charts to find some good trading opportunities. The pair that I want to speak about today is CHF JPY, and the reason for which I want to speak specifically about this pair is because finally it has broken away from the daily range that we had identified in our previous video. So it's definitely ready for a trading opportunity. So I want to explain exactly what kind of situation we have on the pair and how we can be taking advantage of the situation from a capitalizing perspective on it. Now, as usual, I will keep the analysis as educational as possible so that you will learn some very important concepts when it comes to your personal trading during the analysis. And the way in which I will be structuring the analysis itself is first, I will be speaking of the market from a technical perspective. We will then go and see what is going on from an order flow perspective too. So basically what hedge funds are doing in the market with the commitment of traders. And if you're able to read what the order flow is and how the positioning of hedge funds is shifting in time, you obviously have an advantage over your competition in the market. So without further ado, let's get straight into the analysis and see exactly what kind of situation we have. Now, starting from the monthly here on CHF JPY, we can see that the market has provided a nice impulse to the upside, breaking above the previous high. Now, when a high in the market is broken, it is turned support because a high by definition is a resistance area. The market had found monthly resistance at this zone. So we had a monthly resistance area which the market broke to the upside with this impulse, and at that point, previous resistance is turned support. So currently what we actually have from a monthly perspective is previous monthly resistance, which is now turned monthly support, which the market is testing, and from which we can definitely expect the market to provide a rejection to the upside, possibly to create a higher high. So on the monthly situation is very clear. We have previous monthly resistance, now turned support, which the market is testing and rejecting to the upside. So another thing that we can see on the monthly is that in general, if you have an impulse in the market and you want to measure the correction, then what you have to do is take your Fibonacci from the low to the high of the impulse. And if we do this, we can see that the 50% is the Fibonacci level that is aligning the best with structure. In fact, it is aligning exactly with the previous monthly resistance, which is now turned monthly support inside of this zone, and from which we can expect the market to create the next rejection to the upside. In fact, this is a confluence of support area given by the 50% Fibonacci and the previous monthly resistance, which is now turned monthly support, and from which we can expect the market to get rejected to the upside. So on the monthly, everything is clear. We expect the market to possibly create a deeper test of this demand area before creating a rejection to the upside. Let's go down on the weekly. Now, on the weekly time frame, price action is very clear. We have a market which had created this M formation. After an M formation, you want to see the market provide a retracement to complete the pattern at the neckline before the continuation to the downside, which is exactly what the market is currently doing. This is usually how an M formation plays out. You have the M formation, then the market completes the M at the neckline, so the previous support turn resistance, and then the market respects the neckline as a previous support turn resistance, which is exactly what it is. And the market creates the continuation to the downside, which is exactly what the market is doing here. In fact, we have the M formation, which got completed at the neckline, and currently the market is providing the continuation to the downside, which is exactly what you expect in this kind of situation. Going down on the daily, what do we see? Now on the daily, first of all, we had spoken about CHF JPY quite a few times in the past. We spoke about CHF JPY when the market was here. I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the upside, and that is exactly what the market did. Then we had the market create this W formation, and after a W formation, I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside, and again, That is exactly what the market did. Then the market provided this overextended information, and I made another breakdown when the market was here, explaining all the reasons for which from here we wanted to see the market create this move to the upside. And again, that is exactly what the market did. Then we had the creation of this W formation, and I made a full breakdown explaining all the reasons for which from here we wanted to see the market create this move to the downside and complete the pattern at the neckline of this W formation. And again, that is exactly what the market did. And I will link in description all this previous analysis. So you find everything linked in description, so you can go and check it out for further reference and more free education. But at the moment, what do we have and how we can be looking for the next capitalizing opportunity on this pair? Now, first of all, we can see that the market is currently providing an overextended information on CHF JPY, and we know that all that zone that is here, all this area here is all demand from a monthly perspective, as we have already identified at the beginning of the video. All this zone here is very strong demand for this market, because on the monthly we have already seen that it is a confluence of support given by the Fibonacci and structure. So all this area is strong support, and the market is approaching this area with a bullish pattern, which is this overextended M formation. So how we will be approaching this kind of opportunity, how we will be looking for a nice longing opportunity on CHF JPY with students. Now, before I show you this, let's first go and give a quick check at what we have from a COT perspective on the CHF and on the JPY. So what hedge funds are currently doing in these two currencies. Now, what we can see if we start from the CHF is that the CHF currently is quite strong, and hedge funds have been longing it. In fact, we currently have 21.4K long positions and 5.5K shorts from an institutional perspective on it, with 15.8K net positions. In fact, we have a long exposure of 40.7%, short exposure of only 10.5%. So the CHF is very strong. But if we go and see what we have from a JPY perspective, we can see that the JPY is even stronger. In fact, we have 41.8K net positions on it, with 30.3% longs and 30.3% long exposure and 7.5% short exposure, with a massive 55.6K long positions and only 13.7K shorts. So the JPY is even stronger than the CHF, and that is the reason for which it is creating this move to the downside. Hedge funds have been longing the JPY aggressively. And obviously the market reacted and created this move to the downside. So if we are to be looking for a move to the upside, it means that we need a retracement in the strength of the JPY and the CHF to remain strong, which is definitely possible considering that we are entering inside of the demand area that we have already identified on the monthly. So as usual, the way in which we will be approaching this kind of situation with students is being reactive and not predictive. And the monthly, weekly, and daily timeframes combined with the COT data are the best timeframes when it comes to the directional aspect of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. And at the moment, if we go down on the 4 hour, what we can see? Now on the 4 hours, we can see that the market has just been continuing its move to the downside without providing any sign of bullish price action. So everything is extremely bearish. And until everything will remain bearish as it is right now, obviously we cannot be looking for any kind of longing opportunities. So what we will be doing with students is monitoring price action from a 4-hour perspective during this move to the downside. And we will be waiting for the market to shift from a 4-hour bearish market to a 4-hour bullish market. And only if the market will shift from a 4-hour bearish to a 4-hour bullish market, only at that point we will add CHF JPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and for the completion of this overextended M formation at the neckline, aka the previous support, which is now turned resistance, which is the completion point of the pattern itself. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. You'll find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me. Each and every day you get a new daily market breakdown showing you exactly how to apply the strategies with entries, stops, and take profits, as well as having me answering every single question that you have every day. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in the next video.